AFB, your partner in responsible, inclusive retail credit.
Welcome to the CNBC Africa Panel Debate on Financial Inclusion in East Africa, in partnership with AFB. Now, majority of the world's working age cannot access formal financial services, with barely a quarter of the sub-Saharan population having access to conventional banking. The expansion of access to financial services among the lower-income households and smaller enterprises remains an urgent need for any African economy. On my esteemed panel to discuss East Africa's financial inclusion is James Wainaina, who is a Vice President and Area Head of Business for East Africa for Mastercard, and a man who just celebrated his birthday. Next to him is Mr. Peter Mwangi. He's a Chief Executive Officer at Old Mutual. He's not new to the financial services sector, having served as the Chief Executive Officer at the Nairobi Securities Exchange. Next to him, we have Chidi Okpala. He's a director for Airtel Money for Africa, and also having served many years in the African retail banking space.
Thank you.
Finally, a man we all know in the banking space, Habil Olaka, Chief Executive of the Kenya Bankers Association, the umbrella body for the commercial banks in Kenya. Gentlemen, thank you for making time to have this very important conversation. And we'll be looking at all this conversation about financial inclusivity. I think I'll start with the gentleman immediate next to me, Habil Olaka. You've been representing the banking space and their rights and whatnot. Give us a bit of where we are right now in terms of financial inclusion, not just in Kenya, but in the region.
Maybe one of the reports that I can allude to is, I think we know of the FinAccess survey. FinAccess survey is a survey that is carried out to sort of like measure the level of financial inclusion in the region. And for example, the Kenyan survey was first done in 2006, and then 2009, and then 2013. And if I can just draw on the parameter of the Kenyans who are excluded from financial services, whether formal or informal, I think the number that comes out is in 2006, the Kenyans who were excluded were just about 39%. In 2009, it moved down to 31%. And in 2013, which is the latest we have, it was down to 25%.
So when you say they are excluded or included, what exactly do you mean?
In other words, they do not have access to either formal or informal financial services. Formal would be normally the commercial banks, the SACCOs, the microfinance institutions. Then we have got the informal, including the access through the mobile financial services. So we have seen quite some improvement, moving from 39%, in fact 40% really excluded completely, down to only 25% excluded. And right now we are carrying out the survey for 2015, which I believe would bring that number down from 25 to something much closer. I think we have made quite some bit of progress.
Right. Let me just bring in Chidi, because you've been working in the African retail space for a long time, from banking and now running a telcos. What are the trends do you see in the African space, and how do they compare in the East African region?
Well, I mean, it's quite clear that East Africa is the poster child, if I may use that phrase, for mobile money in Africa. What we've seen is, so essentially they've led the way, and the regulators in the rest of Africa have sort of like adopted nearly the same in terms of regulatory framework to drive mobile money in the respective regions and countries. And so, almost every country, they've allowed telcos to offer mobile money services. In some countries like Nigeria, telcos are not allowed, but are allowed to provide infrastructure for banks and non-banks to provide the same service. We've seen rapid evolution. Obviously, the pace varies from country to country because this is a business that largely depends on a substantial ecosystem. Right. And so in markets where either telephone penetration is not as strong as East Africa, or where literacy levels are not as high as in East Africa. It's taking a bit of time.
Right.
But we're quite encouraged with what we're seeing in some markets like Madagascar, Burkina Faso, Malawi, Ghana. So some markets are picking up at a much faster pace than a lot of others. And we think over the next 2-3 years, there will be at comparable penetration rates as what you find in East Africa.
Right. Allow me to skip Peter and just go to James. You are really passionate about putting plastic money in the hands of every African, regardless of how much they earn. What sort of trends have you looked at in the past years that encourage your business now?
Thank you, Bonnie. I think the plastic card form factor, as you alluded to, it's really a form factor. It's really an interpretation and an expression of how you can digitize cash. So Mastercard, we are a technology company in the payment space, and we see the opportunity of democratizing electronic payments right across the African continent. Obviously, I look after the East African space, and there's a huge upside opportunity. If just looking at the figures that have been alluded to by some of the other panelists, in Kenya, for instance, 97% of transactions are still done in cash form. And when you look at the dynamics of why that happens, it's primarily because the average value transaction that's done in an electronic format, be it card, mobile, money, or whatever other digital format it's done in, vis-a-vis if you compare it with the average cash transaction that's done in this market, there's a huge variance. Right. It'll be anything between $30 and $50 on the digital side, and yet the average transaction in cash form is 80 shillings. So that's the divide that we need to bridge over. I think our view is that there is a very strong positive correlation between digitizing cash and financial inclusion. It's allowing for the leverage of technology to create more efficient, effective transactions and create an audit trail as one does so.
Right.
What we've seen in, Chidi mentioned, East Africa being a poster child. It's a poster child for different technologies, basically demonstrating that what we believe is there is a business case. We've made great strides, but there's still a lot of work to be done for that penetration to move well beyond the 97% level, as alluded to.
Right. Let me just bring in Peter, because you've been in the securities exchange space for quite a while, and we're talking about access to banking, something very elementary. Top of mind, what do you think has been a challenge? Because when Habil was talking about 30%, 31%, I was worried. We should have gone faster than that, because this is very basic to my mind. What do you see as challenges to financial inclusivity in this space?
Well, I think, Bonnie, that a lot of progress has been made, but clearly there's still quite a long way to go. Mm-hmm. And the challenges are numerous.
Yes.
I think the first challenge that we need to overcome is just creating the awareness of financial products and the value that they add to people's lives, right. And then building the distribution capability to ensure that those financial services are available, right, and are accessible to the end consumers who need to use them. But having said that, and I take your point about basic payment solutions or short-term savings or credit, yes, being the first point of entry for people who are entering the formal financial services sector. But if you drill deeper and look at the access to, if you like, more sophisticated financial products, right. So as the customer matures and moves from the basic products to perhaps long-term savings, investment products, or indeed protection products for their assets and for their lives and so on, and for medical bills, then the penetration is even lower. If you look across the region, the penetration levels, for example, in life insurance, which is at the other end of the spectrum, are below 1% in most countries. Right. So there's still a lot of work to be done once we've brought these consumers into the fold, mm-hmm, for them to then now enjoy the full spectrum of financial services products
Right.
that are available.
Right. And obviously awareness has been the biggest headache for all the people participating in the space of trying to expand financial inclusivity. But they got a big gain and a shortcut to all this effort by the rise of mobile banking. And that has been, like Chidi said, the poster child for everything possible and everything good in East Africa. So let's just get there. And every time we're talking about M this and M that, and we have been an M economy. Chidi, you are trying to drive digital business for Airtel in Kenya. What has been the impact? Because we talk about this and we celebrate it, but what has been the empirical impact of the rise of mobile banking in the East African space?
I think typically, okay, let me just take a step back. The telcos have I wouldn't say an advantage, a privilege that's been conferred on them. And that's the fact that they've been able to build national networks, telephony networks.
Right.
And banks have some challenge in that deploying a brick and mortar or a physical bank branch depends on a certain threshold for density to be able to sustain that infrastructure, whereas the telcos, we don't have that sort of challenge. The second is that the telcos have brands that resonate more with the public. So people know telco brands everywhere, depending on where you see it on the economic ladder. The third is that the telcos understand distribution fabulously, and there are only two groups of entities that understand distribution, and that's the FMCG companies and the telcos. So that's the sort of strength that we have and that we're bringing into the space. And so what we've used that as telcos to do is, so what has now happened is, if you look at the entire population, very few people have access to banking services.
Right.
And so we leverage this advantage that we have to extend these financial services to the members of the public on the back of the mobile phone,
right.
which is what we essentially have. And we've started with the basics. We started with simple payment services. You're able to transfer money from person to person. You're able to pay your bills, buy airtime, and do all the basic stuff that you need to do. We've now moved to the next phase, which is some financial services. Savings, you can save with your phone. You can borrow from your phone. You can withdraw money from an ATM. You can buy insurance, and that's actually the way mobile money service has progressed.
Right. Chidi, obviously this sounds like a very happy marriage, but 10 years ago when M-Pesa was just setting up, people like Habil Olaka were not very happy about that, and there's a lot of opposition from the banking space. When did we come to the space where we finally realized this is the silver bullet? Habil.
I think, yeah, you are right, Bodi, because in the beginning, I think one of the biggest opponents to M-Pesa, for example, was coming from the banking sector. And I think that was before banks realized that this is a platform that can be leveraged upon by the two parties to achieve the objectives. Yes. So as Chidi mentioned, banks are leveraging on this to be able to access the huge client base that the MNOs have. And on the other hand, the MNOs are leveraging on this to be able to provide financial services. So it's a win-win situation. And I think when banks came to realize that and joined on, that convergence has really worked well for both parties. And banks now have got, initially it was just a payment platform. It was purely for payment. Now, as Chidi mentioned, we are seeing more players beginning to provide services across. Banks are able to pick deposits, now being used as a deposit mobilization tool. Banks are able to provide credit across the line and provide other services. And I think that then just makes the marriage more productive.
Right. In terms of regulation, what sort of challenges are we likely to run into? Because everyone is so excited, and every day we have an announcement. This bank has partnered with this mobile service provider and whatnot, and we're expecting Peter to make an announcement soon that he's partnering with someone. But what sort of legal and regulatory challenges are we likely to run into, Peter?
Well, I think that there's always a balance to be struck, because I think East Africa has really been at the cutting edge in terms of driving this, the use of mobile technology in financial services. So we are breaking new ground, if you like, and the regulation has to be responsive in that context to facilitate the innovation,
right,
while ensuring that the depositors or the borrowers or the users of the service are protected. And I think so far, the regulatory authorities have done a very good job. I think our central bank has in particular, done a fantastic job of allowing these developments to take place.
Right.
And I think we have sufficient history now to say that the platform has been tested and that it is trusted by consumers.
Right.
The risks are very well understood and they are well managed. So I think that obviously there's always a role for regulation to provide the necessary safeguards, but without stifling the innovation that needs to continue to happen. Because if you think about the progress that has been made so far, a lot of it is around banking. There's now a little bit of effort in terms of the adjacent sectors. If you think about capital markets, there's still huge opportunity there for mobile platforms to be used to avail capital markets products and services. The same with insurance. And I think that we are yet to see the big breakthroughs in those other markets.
Right. Chidi and James, both of you are in this space trying to push this product. And as Peter says, we are still celebrating in all this. Do we have any markets known that have done this successfully that we can say we have a best practice here and that we can run with this? Or should we prepare to fail?
Well, I mean, I think we're in the best market, which is Kenya. I mean, this is, mobile money is close to 10 years old in this market, and there's no other market that's as successful as Kenya. Tanzania is very exciting as well, largely because of the degree of competitive intensity. So, so those two markets, and to a lesser extent, maybe Uganda. And I think they are the best in terms of, if you look at mobile money landscape globally, these are the top 3 countries that we have. So the good thing is, we're leading the way. The bad is that, look, we're not learning from anybody. Right. But I think it will be an evolution. So, and that's actually what we've seen. And so today there's a lot more collaboration with the banks. Tomorrow will be with the capital markets. And to just, as people progress along the economic ladder, their financial needs also evolve. So when I've nurtured someone to transact with mobile money and I've gotten him to save and borrow with mobile, then after 2-3 years, I can get him to start buying shares with the mobile, via mobile money as well, and buy insurance, savings products as well, with mobile money. So it will evolve over time, and as we are evolving as operators, our regulators will also evolve because remember, it's a partnership, it's a collaboration. Right. And again, we are guinea pigs, so both on the regulatory side and as operators. But I think so far we've done it reasonably well. And we like what we see, and I don't foresee challenges.
Right, because why I brought that issue, and James, you can take this up, because we seem to be celebrating this in East Africa, but the reason why it has not particularly picked up in Tanzania as much, or with similar success in Uganda or Rwanda, remains, to be known. No one seems to understand this. How much of, is there something peculiar about the trade flows and the deal flows in this space that make it thrive?
Okay, let me just make a few comments before James comes in. Sure. I think what has happened, we have this business in 17 countries. And I think globally there are probably about 300 mobile money operations across the world. What has happened is most operators, when they launch a service, they just copied and pasted what M-Pesa has done here in Kenya, and which we've all learned that is not the right thing to do. So I think we need to apply contextual intelligence in what we do. Every market has its unique challenges, unique pain points. Even the consumer behavior is very different. And so whereas P2P is big here in Kenya, P2P is not big in a number of markets because they don't have urban-rural, rural-urban migration, or the incumbents or the banks, as the case may be, they are well established, and they offer in-country domestic remittances. And so in every market, the service providers, of course, working with the regulators, need to locate the specific needs within those markets that will make the service to catch fire. Right. And I think that's just one new learning that we have that will make a lot of difference and help in fast-tracking the adoption in the respective markets.
James, how do you make it catch fire?
Yeah, I think if you take a step back from this, there's a segmentational play at hand here. A simplistic segmentational view would be income-based or industry-based. To assume then that the bottom of the pyramid all behaves the same, doesn't have its own cultural nuances, there are issues to do with literacy, etc., I think would be a big mistake. Each market has its own nuance that now needs to be leveraged. The other thing in my mind is that these are demand-driven markets. So if you're going to make any penetration, you need to impact what the consumer experience is going to be, but to ensure that the rest of the ecosystem that you're influencing in a way that makes sense for them commercially. So if you look at the Kenyan marketplace, actually there's a convergence of several strategic policy plays that are creating an extremely enabling environment beyond the successes that we've seen. Right. The government has a very strong cashless / cash-light agenda that has been stipulated, and we can already begin to see its impact rolling out.
Which is also getting a lot of opposition.
I mean, there will always be change will always have its challenges. Right. But if you think about what is happening is there is a convergence of public and private sector in terms of driving certain initiatives. And ecosystems evolve. They don't just kind of wake up overnight. And what happens is, as you throw all these different interventions into the ring, the market picks up those that are most relevant to it. You alluded to silver bullet. I don't think it's silver bullet. I think it's silver buckshot. Okay. So there'll be 100 buckshots in there. One market will pick 5 buckshots. Another market will pick 10. So what that mix and ratio is going to be is different. Right. Today, Chidi is the expert on the telco side. I would say that there's a lot of USSD type sessions that bottom of the pyramid is executing. I would suggest in a market like Kenya, where there's very high literacy rates, in another 3-4 years, you're going to find a lot of app-based type transactions that are playing. So as we evolve into that kind of space, what is being done then on the payment space to facilitate viable propositions for the bottom of the pyramid and for that play? Right. And what will happen in Kenya, in fact, in one region of Kenya, will not necessarily be a success factor in another. Right. So I think segmentational play, there's a real importance in terms of understanding that. So we have a very fertile test bed in this environment, enabled by all these convergences happening. And the chances and probabilities of success, in my mind, are high.
Right. Yeah. All right. I'd like to put a pause from my panel and just bring in our audience here. And this gentleman have been talking about a lot of interesting things about the space we are. And the conversation seems to be getting and be anchored around the mobile telephony system and what it has changed. So I'd like to, if you have a question, comment, you just stand up, tell us where you're from and shoot it, and we'll be glad to take it. Okay?
Thank you very much, gentlemen. My name is Lois Maina. I work for UN Women. And it's really interesting to hear what is happening in this landscape. And for us as UN Women, one of the areas we are focusing a lot is on financial inclusion for women, because we are also realizing that women face really unique challenges. If you talk about literacy levels, if you talk about collateral requirements, for example, need for privacy, they don't have a lot of time in their hands. So they have, as a unique segment of the market, they have their unique needs. And maybe it would be nice to hear from you what is happening within this sector. What are some of the measures that are being taken to ensure that women who have remained really marginalized are actually also included? Right. Thank you.
Thank you very much. Sadly, we didn't observe the gender rule. We don't have a lady on the panel today. And so we'll allow all the panelists to answer her question. Let's start with Habil.
I think I look at it from 2 perspectives. One is there are various sectors where women do pretty well. And I've got, for example, in mind agribusiness. Agribusiness is one area where women are doing pretty well. Last time I was visiting a farm in Limuru. And what that lady is doing is something you like. But the thing is that it's not unique for women. It is just a sector where women happen to be doing well. And so from the banking perspective, we would rather develop products that are unique for that particular sector, in which case women will benefit, not because you're directing a product to a woman, but because you're directing a product to address challenges in a particular sector. Right. That's one, and there are a number of sectors where women do quite well. That's one. The other one is, I know of banks that have developed specific products targeting women and the challenges that women have. And there are quite a number. I know of a few that we can mention, but have got specific products targeting women. So I think there are several interventions at various levels within the system that are targeting to address that specific problem. Okay,
gentlemen, very quickly responding to that.
Okay, for us in Airtel Money, we love the women folks. I mean, it's,
everyone does.
And two main reasons why we do that. The first is women control household expenditure. So even in households where they're not employed, the basic household expenditures are handled by the women. So that makes sense. And being a payment service provider, we're particularly interested in that segment. The second is we've also found out that where women have their own personal income, up to 70% of that is plowed back into the families, which is excellent. We have, two initiatives that we're currently testing, and we like the responses that we're seeing. The first is something we're doing in Uganda to support the village savings groups. So you typically have these savings groups that meet on particular days of the week, where when they meet, they put money together, and they do rotational lending as well. And normally there are issues around the existing system. So there's a box with maybe 2-3 padlocks, and there's no transparency, there's no trust. The administrator can take off with the box, or he takes it home, the son takes a walk with it and all that. So what we've done is actually to digitize that whole process, to bring efficiency, to bring trust. So there are now 2-3 people with pins to the wallet. The wallet is now electronic, it's no longer a physical box. Everybody is notified whenever there's a transaction. So, and we're now linking them to the banking system, which is really excellent. And the women like it, and we like the sort of responses that we're seeing, and we hope to explore that. We're also doing something very exciting with AFB, who happens to be a sponsor in Tanzania, and that's essentially microloans. And we've found out that the women's segment is the uptake of that product has been quite encouraging. And so even as we tailor it further, as we customize it further, we are really looking at that segment and hopefully have a variant of that product that is specifically targeted at women.
Right. James and Peter, I'll have your responses to that, and you'll tell us if your organizations like women after this break. But we have to take a quick break. You're watching the CNBC Africa Panel Debate on Financial Inclusion for East Africa, brought to you, of course, by CNBC Africa and the AFP. We'll take a quick break. More of this after the break. Welcome back. You're still watching the CNBC Africa Panel Debate on Financial Inclusion in East Africa. And we left it on my panel where we are interrogating the concept of market segmentation. And James and Peter, you had to give your comments. There's a very important point that was raised here about women, and not just women as a special market segment, but there are different market segments. What's important in terms of recognizing this, James?
Thank you. Our technologies, as they have been deployed, the relationships that we have with the final consumer would tend to be with another stakeholder. That would be a bank, it would be a government, it would be a corporate institution. Our technologies and interventions have had profound effects on different segments. So we have deployed social payments, G2P payments in South Africa. If you look at the mix and diversity of the recipients, it's a broad spectrum. Same goes to the intervention, the national ID project that we're working on with the Nigerian government in Nigeria. Same goes to the recently announced initiative we're looking at executing in Egypt. I think from our perspective, it's about scale. What scale allows you to do is to have a real sense around the data flows, that then allow you to take segmentation to a different level, because I think the term segmentation is going to continue to evolve. Right now, segmentation is what we understand and what we believe, primarily driven by our human understanding and our human interventions. So for instance, is it a woman, is it a man, etc. But there are many ways in which men and women maybe behave the same or behave differently. If you look at, for instance, credit scoring segmentation executions, it's really allowing the power of data to allow you to segment and then provide effectively solutions for the different markets. What we see ourselves, our role is to allow the railroads that Mastercard has invested in and the front-end technologies and interventions like contactless, etc., to then play in those different spaces and enable banks, governments, and corporate institutions to fully leverage them to meet the unique demands of the different market segments that those players would play in.
Right. Peter, does Old Mutual like women?
Yes, Bonnie, we love women here.
And for the record, so do we.
Yes.
I think that it's true that women have to overcome certain challenges which are gender-based. But from our understanding of our women customers, we focus on the things that women do better. And there's no doubt that there are certain advantages that women in general have. They tend to be more prudent, they are more risk-averse, they are better at long-term planning, they are better at teamwork. So if you look, for example, at the experience we've had in Faulu Microfinance Bank, which is part of the Old Mutual Group, we have a lot of entry-level banking customers, and a lot of them are in groups. So it's group lending. If you look at the performance of those groups made up of ladies do better.
Are the men listening to this?
And they do better in all sorts of ways, whether you're tracking default rates or just the progress that the individual members of the groups and their small businesses make as you engage them. So there's a lot of opportunity to reach out to women who don't yet have these financial services, because in a sense, they are a better customer to have.
Right.
Yeah.
Gentlemen, I'd like us to shift gears a little bit, and we've talked about inclusivity, and these people are now banked, and in a way they can access financial services. But let's talk about the access to credit and borrowing, because we are still pushing the idea of entrepreneurship in the African space, and a lot of these small groups are trying to set up their small entrepreneurship outfits in their own way. Access to credit. Yes, I have 3-4 banks that can give me loans even via mobile banking, but can I afford it, and do I have access to this? Habil, let's start from there. When will we ever get to say people can now access credit in this space, and especially on the lower end of the market?
I think one of the things that we should maybe bring to fore is a mechanism that we're trying to put in place, which is the credit information sharing mechanism. And this is a mechanism where the information is available on the credit history of the individual, where you can use your credit history as almost like collateral. Because one of the biggest challenges that I think most borrowers have is inability to provide the necessary collateral to the lender, because most of the credit market in Kenya is collateral based. So you need to provide some collateral, and that's where most of the bottom of the pyramid, the SMEs, the other borrowers in that sector get challenges. Now, with this credit information sharing initiative, you build a history, and on the basis of your history, you are then assessed, and you are then able to access credit based on your performance, rather than a bank relying on or even the other credit providers.
But Habil, someone would argue this is just you tracking me, how I'm paying and how I'm not, and shaming me when I don't. But a lot of people still say credit is too expensive. I simply can't afford, whether you have my record or not.
On the contrary, from the market, about 96% of the borrowers are good performers. It's only the 4% who somehow taint the whole picture.
Okay.
And if you can be able to identify the 4% and price it accordingly based on their performance, and the 96% who are good performers like you and myself.
Okay. I'm not too sure about myself.
If you can then be able to price that accordingly and provide me some credit access on the basis of my track record, I think that is now developing the credit market, where you're moving ahead. And so I believe this mechanism is one that, if appropriately picked up by the borrowers, because we rely more on the borrowers allowing us to provide the information to the central portal where the information is collected.
Right. Chidi, you've had many years in the retail banking in Africa. What sort of trends do you see, and how do we ensure that people have real access to credit? Other than just, yes, we have the credit reference that is very good and doing a good job, but people still simply can't access this. They can't afford it.
Yeah, I mean, if you look at the challenges people have had, I mean, there are issues around if you don't have a bank account, I mean, how else will you borrow? You can only borrow from loan sharks. The second is you don't have a credit history. But the good news is that machine learning, I mean, is essentially the leverage of algorithm, or building algorithm based on behavioral data and use it to predict and develop predictions that you use for credit, which is exactly what we're doing. And that's a strength that telcos bring to display. We have access to excessive data, if I may use that phrase, and we're able to leverage that data. So we can actually credit score and build risk acceptance criteria based on your behavior on our network, both on the GSM side and on the mobile money side.
Right. Chidi, everyone seems to be talking about information and information. Yeah. I was hoping to hear someone call for maybe in the future Habil would have a reduction in the rates and not just having all our information out there, yet we simply cannot afford the loans.
No. We are not sharing your information with anybody. So we use your information to make loan offers to you. And typically what happens is, because it's strictly unsecure, so we lend to you, and as you pay back, the cost of those loans begin to reduce, which is typical. But the point is, these individuals that we're lending to now never had access to credit. Nobody ever looked in their way. But today they have access to credit because we're able to leverage machine learning to build the right kind of profiles and lend to them, and are paying back.
Peter, other than information and using the borrower's credit past as their collateral, how else do we make credit accessible?
Well, I think that that point is actually crucial because it overcomes a lot of the handicaps that previously blocked out people from accessing credit. So a lot of people will have a budget that they are running. And if they are making their payments on a tool that allows for you to model how they manage their finances, then you can lend to someone based on their own financial behavior. I think that's key because you don't have to ask for any marital relationships or any marital property as collateral for that borrowing. But I think I'd like to flip the coin and look at the other side of it, because it's important for people to access credit to be able to grow their business and to provide for their families. But it's also very important for us to develop a savings culture. And people need to be encouraged and equipped with the tools to save for education in future or to save for retirement in future. And that is an equally important part of the debate. And the mobile platform gives us an opportunity also to extend savings products to people. And one of the debates has been around when you deposit your money with a bank, how much do you get? When you borrow from the bank, how much do you pay? And there's an opportunity if we are able to avail savings products, say unit trust products on the mobile phone, where you can sweep funds from your M-Pesa account into, for example, the Old Mutual iInvest account, as little as 10 shillings, and earn 7%, 8% per annum, and have instant access to that cash should you need it. It begins to change the dynamic, because as a nation we need to improve on our savings rate, and then we need to make investments for the future, because that's equally important.
Right. James, I'll come to you, but on the second round of session, then I'd like to, about this time, open the session to the audience. But before that, let's just address very quickly an issue that I think we cannot talk about financial inclusivity without mentioning it. Everyone in the newspapers has been reading about the diplomatic row we have with Tanzania, and this is just one of the many challenges we have as a region. Let's talk about what is the role of regional integration and specifics, EAC, in terms of growing financial inclusivity to the people at the lower pyramid. Because the market segments we're talking about in Kenya, we have similar market segments in Tanzania and Uganda. So let's mention that very quickly, and then we'll get to the audience. Let's start from James.
Okay, thank you very much. I think from a Mastercard standpoint, it's really creating an interoperable environment that facilitates the flow of payment transactions cross-border. And that's really what our network infrastructure railroads bring to the fore. So whatever interventions that we work with our different partners in terms of providing mobile wallets to any segment of the market, it's enabling them with the comfort to know that if I'm in Dar and I'm coming to Nairobi, I need travel expenses, there's some capital expenditure that I need to make, that using your electronic wallet, you can actually facilitate transactions in that way.
Right.
So it can be as really as simple and as fundamental as that. So the way we look at the opportunity in the different markets is not just to capitalize on the low value payment opportunity as you create new merchant categories, etc., in those spaces, but hopefully to see a flourishing of the bottom of the pyramid to this extent that they broaden their market horizons and begin to move beyond the frontiers of their own geographical locations, and now using and leveraging on Mastercard's infrastructure to facilitate transactions cross-border. So, and we've worked with governments, if you talk about it from an East African standpoint, I think very supportive about that role and that vision that we have in terms of creating that enabling environment.
Right. Gentlemen, I'll come to you to respond about the whole integration issue, but let's have someone from the audience, please. Okay, let's start with the gentleman here, then we'll go to the lady on the third row.
My name is Kevin Opio. I work for Strathmore University. My question is to Chidi, and this is what I would call bourgeois mentality in the way you structure services. There's a researcher who has come up with something called poverty penalty, that when you make these mini transactions, you pay more, you see? And I've seen in the banking sector, probably if you're a student, your account is not charged. I mean, they welcome you very much and your life is very okay. But in the mobile banking or in the digital platform, there's no differentiation of who you are. It doesn't matter whether you make small transactions or big ones. But the look of things is, as you go up, your life is better. But as you make smaller transactions, your life is more, thicker. So if you're looking at increasing access across the board, looking at the market, you call it market, but I do say look at the people in Kenya, the proportion that you want to reach are actually down. Their income is low and they're the majority. All right. How are you going to tackle this? Yes.
Okay, Chidi, quickly.
I mean, it's an interesting question. Again, this is a relatively new industry. So like I mentioned earlier, so when you start with the basics. And obviously, as you progress, you segment better. And of course, you price differently based on behavior, based on profiles, etc. So we'll come to that. I think it's still early days. But it's important to note that here in Kenya, for example, person-to-person transfer on Airtel Money is free. And it's been deliberately structured that way to drive rapid embrace within those segments. But yes, you're right. I believe over time, pricing of the services will be tailored around certain segments or certain profiles. But right. It will evolve. It will evolve over time.
Thank you, Chidi. Let's have the lady at the third row, please.
My name is Vanita Koteria. I work at Jengis Capital as a research analyst. Thank you for the wonderful panel and the debate. I just have a question towards the banking sector or the banking space. I think traditionally we have seen the financial sector and financial institutions have been the drivers of growth, not only in Kenya, but the East African region. But with telecommunications or telcos coming into the space, providing financial services now, how do we see the banking sector changing its role or providing or moving its position to now provide financial inclusion? So how do we see that space or the financial institution space changing? And will we see, according to you, will we see now telcos taking a larger share of driving growth? Or perhaps becoming or taking into the space of the banking sector? So I'd just like to hear your opinions. Thanks.
Habil, you want to take that? She's asking if you'll be jobless in the next few years.
I think one of the biggest growers of financial inclusion, in my view, especially as it affects the banking sector, two important developments. One is the convergence between mobile telephony and banking services through the mobile banking developments. The other one is the convergence between the infrastructure suppliers and the banking sector through what we call the agency banking, where banks are leveraging on the existing infrastructure to be able to provide the banking services deep down in the rural areas where ordinarily they would not have been able to put brick and mortar. And I think those two developments are really driving the financial inclusion, especially from the banking sector approach. So I'll look at mobile telephony as one of the developments that have driven financial inclusion, but there are others that will come along, including agency banking and others. And as long as we still have the same approach, especially from the regulator, one of the positive developments that led to the success of mobile banking in Kenya is the approach that was developed by the regulator, where, in my view, they actually took risks that ordinarily most regulators will not take. For instance, M-Pesa was allowed to operate from 2007. The relevant legislation that governs the operation of M-Pesa, the National Payment Systems Act, was enacted in 2013, almost 8 years later. The regulations came out in 2014. Now, over that period, effectively what the regulator was saying is that let the innovation develop, and I'll observe the innovation, look at the risk that it's posing, and I can then put in a framework to be able to control those risks, which most regulators will not normally take. They'll first of all put the law in place, the barriers in place, and then you are allowed to innovate within that space, which obviously stifles innovation. And I think that's how we have been able to succeed in the Kenyan space.
All right. I get to this gentleman, and then we'll come here and here. Very quickly, we have just under 2 minutes. So ask your question.
I'm Abdigani Diri. I'm from IBM Research Africa. I'm working in the Financial Inclusion Research Group. Firstly, thank you very much for a very interesting, insightful, and at times amusing discussion on financial inclusion. My question is on data. I know this isn't your favorite topic, but in order for us to really move financial inclusion, one school of thought says that it isn't necessarily financial products, the channel, or even money, but credit profiles and data that's going to be the driver for financial inclusion. Chidi, you mentioned some of the more cognitive technologies that Airtel is applying to really try and understand people. I would love to hear what Mastercard and the other panelists think about making this kind of data accessible to third parties and what they're doing in conjunction with one another. Thank you.
All right. We'll take very quickly James, and then...
Thank you very much. In terms of leveraging the data that we see on the network, from a Mastercard standpoint, the data is anonymized. It's effectively, you wouldn't see my card being used at a merchant point. You'd see a card number and a merchant ID. But that's still extremely data rich. We have a consulting arm within our business that actually looks to getting data insights out of that, working with the different stakeholders that we have within the ecosystem to share generic best practices, or even sometimes to do a specific deep dive around how to leverage data that emanates from a specific player. We fully agree. I think the computing power that we're going to continue to see evolving is going to allow us to decipher a lot more out of the data trends that we're going to see, and allow us then, I think, to have a much deeper segmental approach, not only in the credit scoring side, but even in terms of insights that allow us to develop new cutting-edge products. So fully aligned with your thinking on that.
I'd like to just pause before I give the guest to panel to respond to that question, because we're running out of time. Let's get another question.
Thank you very much. My name is Habil Olaka. I work with KCB. We've been talking about financial inclusion. And in Kenya today, we have a population of around 10% who are Muslims. They have been locked out of credit automatically. We have around 7 banks which are offering financial products which are along in line with Sharia. None of the mobile companies are offering lending which are Sharia compliant. Only 1 or 2 investment banks, and none of the credit cards. So I wanted to ask them what's being done to include the population.
All right. Or they can include that and then they'll invoice you for the idea. Let's have the lady and then you will respond to both.
My name is Deepa Doshi. I'm a financial consultant. And thank you for this opportunity today. Just a question. I think at the moment, mobile banking is a very good way of including very many people at the grassroots level. But what I notice is it's very much debit payment system at the moment. So how will it evolve to more of a borrowing system? And at that level, I think the credit referencing is still very limited. Mm-hmm. So how will we collect data at that level?
Okay. Chidi?
Okay, well, I'll just put on sort of questions. I think I like the idea of the Sharia-compliant credit products. Credit is still relatively new for us in Airtel. We've just started, and we're very interested in a Sharia-compliant product, and we'll be more than ready to work with your organization, and we're going to exchange cards after this.
I think I fully concur with the observation made by Mr. Opio here that the lower you are in the spectrum, the more services and goods cost. And I think to a certain extent that reflects the economics of distributing to those groups. And that's why mobile platform is so exciting, because it makes it possible to acquire and service that customer in a cost-effective manner, in a way that is self-sustaining and that is scalable.
James, very quickly, then I'll come to you, gentlemen, for your closing comments.
Yeah, certainly. I think just tackling the issue around how you democratize credit. I think what is critical in that aspect in terms of data capture is obviously the digitization process. And I think it has to be an all-hands-on-deck kind of approach in terms of being able to have a sense around what that transaction is, what its attributes are. The more data you can capture at that point, no doubt the processing of that information then gives us a richer platform of which to create segmentational products that have a fuller total cash cycle view, as opposed to just a kind of segmented, let's give so-and-so alone. I think the solution has to be broader. From a Mastercard standpoint, I think what excites us is digitizing that whole process and allow it to flow on our networks. Allows the customer a whole sense of convenience, and other players in the ecosystem all sorts of other ancillary revenue opportunities, hence creating sustainability right across the ecosystem. That's the play we see. Thank you.
All right. My very esteemed audience, I'd like to close the question and answer session because of time, but we have these conversations offline after this. But the gentlemen, 30 seconds each for your closing comments. Where do we start? We'll start here.
Yeah. I think the whole thing is, you mentioned something clearly about the regional integration and how it comes in. And I think under the ESU, you've got the regional integration and development program. And there are a number of initiatives that are being pushed through. One is, for example, interconnecting the East African payment system, where banks can be able to make payments across real time. And the players can then be able to pick money across the border real time. The other one is connecting the ATM networks through the ATM switches, and there's already a discussion around connecting the switches regionally. That will effectively make it much easier for somebody to go across and virtually, using your card, you can be able to access money from an ATM across the border.
Right. Chidi?
Well, for me, 2 points really. I think First is, it will be wrong for us to leave here with the impression that banks and telcos are competing within the financial inclusion space. I think it's a collaborative effort. They have their strengths. They have the content, the financial services product. They are more. They have a relationship with the central banks with some history. I mean, we are new in the space. We have built railroads. We have the infrastructure that they can leverage. I think it should be a collaborative effort rather than we against the banks. The second point is on cross-border, facilitating regional integration. We are already doing that. We are wiring all our operations. We are facilitating remittances more cheaply. I mean, in East Africa, for example, we have close to 200,000 distribution outlets, and you're able to transfer funds across countries at almost like 2-3% of what the existing service providers are doing. But the second point, which is very important, is there's a lot of regional trade, small level regional trade that is happening. And with this infrastructure, we are facilitating that a lot better.
Okay, Peter?
Well, I think that there's no doubt the future of the region is very bright. So growth will come, but we need to ensure that it is inclusive growth. And a big part of that, of course, is this financial inclusion, which will take the efforts of all the players. I think there are partnerships, obviously, between financial services institutions and telecom service providers, but also between financial services firms. And I'm thinking in particular about bank assurance, because it's on the back of the existing bank infrastructure, we can roll out other financial products that will provide protection to vulnerable individuals, vulnerable families, vulnerable businesses, especially in an environment where the public sector is not able to fully provide that social safety net.
Right.
And it's important for individuals to take up their role to provide that protection, and for the private sector to support them in doing so.
All right, James, in 30 seconds, take us home.
The digital payments market space is evolving quickly. It has, in my mind, very strong momentum, both from the demand side, which is primarily driven at the bottom of the pyramid, especially because of all the interventions that we're seeing and the ability to very cost effectively at a unit cost basis roll out propositions that capture low value payments, but also because the public sector government has actually within the region have a very strong cashless agenda that are being driven towards it. I think that mixing, that mix is creating an extremely powerful enabling environment for change, profound change. Right. And I think what we're witnessing happening in East Africa, I think is going to be referenced in the years to come as probably the birthing, of a very unique solution that really enables digital payments, but in the process allows for the financial inclusion of significant components of the populations of our countries.
And that brings us to the end of this conversation of expanding financial inclusion in East Africa. My panel has been James Mwangi, Vice President and Area Head of Business for East Africa for Mastercard. Also, Peter Mwangi, Chief Executive Officer at Old Mutual Kenya. We had Chidi Okpala, Director for Airtel Money for Africa, and Habil Olaka, Chief Executive Officer for Kenya Bankers Association. This debate has been convened by CNBC Africa, First in Business Worldwide, in partnership with AFB, a leading retail credit specialist in Africa. My name is Boni Tunya. Thank you for watching.